everyone, this is Ahmed Al Aziz speaking to you of Forex Trading Signal. Welcome to the next training video of the economy indicator. And today we're going to go to discuss about the average hourly earning or the income indicator. So stay with us, please. We will start in a moment. So first of all, what does the average hourly earnings mean, or what does the income indicator mean? So the average hourly earning mean it's the change in the price businesses pay labor, excluding the farming industry. So it is the income or the earning or the wages the businesses pays for the employees and for the people, and that indicator is excluding the farming industry, excluding the farming employees. So what happened or what is the impact of that indicator if the indicator data is positive? So what is going to happen if we increase the earning or the income, then we are increasing the spending of these people. So the moment we increase the spending of these people, then that will raise the productivity because there will be more demand in products and there will be more spending. So the businesses has to produce more products. So if I raise the productivity, then I need to employ more people. Then I will be having change increase or increase change in the employment rate. So I will be raising the employment up. The moment I raise the employment up, then this cycle will repeat and this will end up by having market overheated. When we say market overheated, that means good growth in the economy, and that will lead to inflation. By the way, the inflation, you might ask me whether it's a good thing or bad thing. Inflation means, if you think about it, it comes only when the growth of the economy is going up. So if I have a growth in the economy, I'll be having inflation, and that is healthy thing. We need to have inflation, otherwise our economy is bad. However, we don't want this inflation to exceed limit. So the inflation, the central bank, they will put a certain limits to monitor the inflation. For example, the central bank of the US, they are targeting inflation of 2%. So below 2% inflation, they're gonna go to react, and above 2% inflation, they're gonna go to react. That means we want inflation and we want inflation. So we don't want uh, inflation to go up too much. We don't want inflation to go down. That means the inflation is good for the currency. And by the way, when we have inflation, always we have a good currency and we have good growth. That's why inflation is not a bad thing. However, we need to maintain it within the limit, within the upper and the lower limit. So this indicator, the average hourly earning indicator, is highly impact indicator, and we are having this result coming out with the ADP non-farm employment data. So this indicator is very important indicator and it will impact the market strongly. However, this indicator is released on monthly usually and also on the first Friday after the month ends. So this indicator is prepared and produced by the US Bureau of Labor Statistics, and that is in the Department of Labor in United States. So to show you this again, we have seen this several times in different videos. However, we would like to show you this again. So this is the information we're gonna go to have from the Bureau of Labor Statistics, and you're gonna go to see this earning indicator along with the non-farm or employment and unemployment indicator as well produced and monitored here. So this indicator is a leading indicator of consumers and it will lead to inflation when business pay more for the people. So what happened if the earning increased up or the earning or the income increased? What is going to happen? The cost of living will be higher. That means the productivity will be more and the cost of the product will be more. That cost will be transferred to the consumer. And the moment we have the cost is transferred to the consumers, that means now the consumers having more to pay and more to spend, so they need more money. So the value of the money goes down and the value of the product goes up. So this will lead to inflation, where the value of money goes down. So inflation means the value of the money goes down. So whatever the money amount I was able to purchase, for example, certain amount of a product yesterday, or we call it the basket, that power of purchase, I'm not able to purchase the same amount of that product by using the same amount of money currently. So that is what we mean by inflation. So inflation doesn't mean that the product becoming expensive. No, inflation means that I have low value money in the market, or let's say too much money in the market. That is what the inflation means. So if I want to fix inflation, I just simply need to withdraw the money from the market, and we can do that by using the CB tools, which we have spoken about it on the previous videos. So now, where to find that data and how to analyze this data? This data can be found on the Forex Factory website. And if I go to the Forex Factory website, I will find the indicator and the details of the indicator here. So you can see this is the producer or the company who's preparing this indicator and producing it. And this is all the data around it. So you can see if the indicator is actual greater than the forecast is good for the currency. So normally in the Forex website, guys, we will be having a previous data here, and we will be having forecasting data, and we will be having the actual data release. So normally the previous data, it's the previous month result. It will be there. The forecasted data, it's what does the central bank is forecasting, and the actual data is the indicator itself, the actual indicator. So if the actual more than the forecasted data, that means it will be green, and that green means positive indicator or positive result. If the change amount is big or significant, then the currency will appreciate and will go up. Hence, the gold will go down. We are here talking about the US dollar, and you can apply this concept on all the currencies. However, here we are talking about the US dollar. So if the actual data is less than the forecasted result, then these will become red and this will be below the expectation. Then the currency will deappreciate and will go down. If the actual data black, that means it's meeting the expectation. Okay, let me take you through some data here on the Forex Factory website. If you want to use this website, you can easily set the time from using the setting for the time. For example, I'm living in Abu Dhabi. I can set the time plus 4 GMT for myself. Then this will automatically correlate with my clock in the PC. So if I want to understand more about the Forex Factory and how to deal with the Forex Factory, then we can simply go for the legend. So if you can see the legend here in this area, if I have red icon like this, that means it's high impact expectation and high impact indicator. So if the result is coming out, that means this indicator is highly impacting the market. And if the result positive, it will appreciate. And if the result negative, it will deappreciate. So how to understand whether the result is negative or positive? By looking to the actual data, whether it's green or red or black. Green, positive, regardless whether it's minus or positive numbers, and red is negative, regardless whether it's plus or minus result, and black, that means it's meeting the expectation. So The amber or the orange color, it's the medium impact indicator, and the yellow, it's the low impact indicator, and the gray, it's the holiday seasons, or it is non-economic events. So if I have the yellow arrow here on the right hand side, that means the data has been revised. If I have folder and inside that folder there is a small file, that means there is a news or stories related released. If I have a green arrow on the left hand side here, that means this green arrow it's the next upcoming indicator, and doesn't matter, maybe it will be tomorrow or after a few minutes or after a few hours. Green numbers is better than expected forecast, the way we say it. Red number is worse than the forecast. MM means month over month. Q slash Q, it means quarter over quarter. And Y, it means year over year. When we see the letters K, M, P, and T beside the numbers here, K means thousand, M means millions, and P means billions, like this, and T means trillions. So those are the legend for this indicator. So if we take an example here, you can see here green data means result was better than expectation. This is the expectation and this is the previous data. If you see the yellow arrow here on the right hand side, you can see that this is a revised data. If you can see here the result on red, that means result is worse than the expectation. And you can correlate this with the type of the indicator, whether it's highly impacting indicator or low impacting indicator or medium. So if I go down little, you will see here on the left hand side the green arrow, and that is the next upcoming indicator on 12th December. So finally, guys, I hope that you have enjoyed this video. If you like this video, please hit the like button and subscribe to our channel and share this video with your friend so we can produce more videos, and activate the bell icon so you will receive everything new coming on our channel. Thank you very much and see you in next training video.